Welcome to Invest. We talk about investing, finance, and professional development. At the current time of 7:38 a.m. on the Pacific Standard Time, Ethereum contract at $1,824, that about close to 3% so far. Respect over crypto market and the equity market, we are, quite bright red today, as across the entire market is dipping after the consecutive days of rally that we've been sustaining for the last, I would say, a week and a half. But collectively, based on the last, I would say, 48 hours so far, the news has not been the most appetizing, right? It seems like a lot of corporate companies, especially on the consumer side, and the closest one that we just got, this morning is with respect to Target, which is a convenience store, a large, grocery store in the U.S. It seems like their earnings has taken a huge hit with respect to the retailers. They're forced to be selling a lot of the unwanted inventory, and also there's a lot of additional cost because of high logistics costs, higher wage costs, and with respect to the commodity and the inflationary pressure that's causing a lot of goods to be rising in cost as well, marginalizing the profit that they were making before. In addition to that, we also are hearing from a verbiage from the Walmart CEO, Doug McMillon, that he said recently that a lot of the wealthy family, despite them being wealthy, they are still, penny pitching, which is they're still being very cautious about their spending. So with this collections of news, and hold on, I see that Lowe's, which is like another Home Depot, a type of like a furniture store. They sell like more home goods type of store. They also have illustrated a mixed second quarter results, saying that with respect to their top line, they have missed slightly, and also they have adjusted their guidance for the outlook going forward as well. Looking at other news, yeah, it seems like there's also some uh, pain points around Disney and Netflix. It seems like there are some challenges that they're facing with the rising competition. So there might be some opportunity for more innovations, but that will cost more money for them to burn. Now they also experiencing with this downturn, struggling with respect to the human capital adjustments that they have to kind of maneuver through. So a lot of challenges. I would say, the sentiment, based on the media verbiage that we're hearing this morning, is definitely negative. Okay, so let's just dive right into the technical without wasting more time. Again, right? It's a negative day, and the technical has been kind of indicating this for quite some time, but it's about like risk management, right? So what's the risk profile looking like right now? So look at the technical. So recording time of 7:42 a.m. on the Pacific time again, is leaping down, right? You could see that we have cooled down from the 1998, which is the level of next support, and we try to get above to the next level of 2,150, but you could see clearly we gave up, right? So as we head down, we'll head down to the next level, which is 1860, which we got there yesterday. And as of this morning, we got more negative news. So we're just kind of gliding back down, forming a death cross on a daily, and at the same time being more of a normalized level at 57 out of 70. So we are basically being supported by, or not being supported yet. Like we're gonna get there soon. Uh, Going back to a level that we were testing by July 24th, and then we're gonna head down to somewhere around 36. So ideally, seeing some level lower, if we break 1650, and going all the way down to like somewhere around like 1550, between 1550 to 1250 would be very logical. And then on a weekly, you could see that we are also gliding down. We have crossed up for quite some time, and we're still having a negative inertia. So technically, seeing some more sell-off coming down is more logical than going up from here. And then on monthly, you could see that we are also meeting with the level, so they all coincide and correlate. And right now, you could see that we are at the 48 out of 70 on the monthly, basically being supported by the previous resistance level. So again, daily and weekly are quite bearish, but on the weeks out, on the months out, which is going to be a much later time, and it's going to be quarters out, we should ideally see some rebound by Q3, Q4 from there. And in respect to Bitcoin is obviously comparable, monthly, very comparable. Weekly, you could see that we are forming a golden cross. So seeing some bullishness wouldn't be surprising to me. On the daily, you could see that we're leaping down, just coinciding with the rest of the market. You could see that the balloon might be popping soon. You could see that we've been extended quite long for quite some time. So as we'll see, right? Is this an apex or was it not? It seems like based on the dramatic curve that we're forming here, the inertia doesn't, definitely doesn't support, right? The reversal. So coming down to a lower level, 45, going down to a lower level to 35, which indicate that we will be ideally seeing 20,000 again, or even lower, 18,500 all the way to 17,500, testing the bottom that we tested before, back on June. Can be a possibility, contingent on how much more negative news can we take. And then, it's going to be heading on to the CPI report coming up. And obviously, with respect to the FOMC meeting, the blockbuster one coming up in September, right? So appreciate you. Have a good rest of the day. The rest of the market is quite comparable in terms of the momentum. Again, right, daily and weekly are quite bearish, but months out, we should ideally see some rebound. All right, so appreciate you. Have a good day and take care.